Are you seeing softness in manufacturing?
No, I think the manufacturing, for us, we're hiring people despite that curve, in the United States, we're hiring people in the factories. Difficult to get, because we train them ourselves, but we're finding them because who wouldn't want to work for Snap-on?
But the overall level of employment, is it pretty much constant? And
our overall level is, there's a lot of things that goes in and goes out in that situation. For example, Europe is going down a little bit, but the U.S. is strong, I think. And if you ask the National Association of Manufacturers, they will say it's strong too. They have 500,000 jobs that are going unfilled, and they expect continued growth over this period. And I think that's really positive. It's one of the things we always wanted.
You see those ISM numbers, and I wanted to drill down a little bit into a specific aspect of the manufacturing market, the auto market. It's been a really tough quarter for industrials with auto exposure, but not so much for you. You saw a really nice, healthy rebound in your U.S. vans business and your auto OEM dealerships. Can you just walk me through that dynamic? What makes you more resilient?
I can. We're not tied to the automotive new car sales. We're tied to the repair market. 276.1 cars on the road in North America, and they're 11.8 years old, and they get older every year, and the new ones keep changing. So the demand for our tools is very important. We keep bringing out new tools. We brought out more than 5,000 last year, new tools, to support that demand. So our demand in our sector is not really tied to that. That's why we grew at mid-single digits in the repair business in the United States in the quarter. It's one of the things people really loved.
One of the things that stuck out to me, Mike McKee was talking about this, is the productivity increase from your employees, the number of sales per employee that's been increasing pretty steadily. Yeah. How did that happen?
Well, we focus on that. This is the stock and trade of a manager in the manufacturing business. Huh? We have people at every site that get up every day and think about doing that. We have Japanese consultants come in two dozen times a year and work on special products. My team goes to a factory once a year and spends the week there working with the people. 6 months later, they've recovered from our presence. But we push that, and we have a celebration. 40 teams come in, and we recognize the best one, and they get a traveling trophy. So we put that front and center. By the way, we have productivity, but we've given salary increases 3% every year to our people since 2009. That means if you're working for Snap-on, you'd have 30% more pay since 2009.
But Brooke, this is not the constant, right? We've heard again and again that productivity has been really low, and it hasn't increased as much, even among manufacturers.
Well, you've seen a lot of gains in manufacturers, actually. This has really been a focus point for these companies, especially after that so-called industrial recession in the 2015-2016 timeframe. You really saw these companies cutting costs, reinvesting in their businesses to try to make them more productive. And I think you've seen that sort of play out in the margins. The one question I had, we talked so much about higher freight costs, higher labor costs. The other big one is currency swings, which was a big factor in your first quarter earnings report. And I wonder, is that underappreciated?
Yeah, sure it is. We had 8 cents worth of pain in the first quarter and $26 million on the top line, 2.9%. But we've had it before. We've had currency swings all the time, and we've moved up by 100. You saw those moves. We've managed. One of the things about currency is it's one of the underappreciated things, because people talk about tariffs and they talk about material, but the currency is a bigger swing. And in our quarter, we absorbed all those supply chain disruption, currency, and new product rolling out, and still increased our margins. Our gross margins were the highest we've seen in decades.
You're paying less taxes.
We're paying less taxes.
What are you doing with that money? Because we were told that, in fact, that would go into capital investment. Are you putting it into capital investment?
We're putting it in capital investment. We're putting it in new product. 5,000 new products that don't come cheap. And so you roll those out. And by the way, training has to occur associated with that. When you roll out new products, we have some new software products that have over 130 billion records, data points that guide a technician in solving a car problem. When you roll something like that out, you got to spend a lot of time training your own franchise to sell it and training the technicians to use it. So we spend money on that. That's what we do. I think, for example, Snap-on's in a great position because the auto repair market keeps moving upwards, even in a recession. The worst recession in my lifetime, when people were putting money in mattresses, people were saying repair shop, economy's glum, but repair shops hum. Yeah. And we see that all the time.
All those old cars. Okay.
Right.
Nick, it's great to have you here. Always is. Nick Pinchuk, Snap-on Chairman and CEO.